Hi, this is Khanjan Mehta from Lehigh University, and this talk is about income statements, also called profit and loss statements. So, what is an income statement? It's a financial statement that shows you your company's current income and expenditures. In essence, it shows you whether you're making a profit or you're making a loss. And along with the balance sheet and a cash flow statement, it helps you understand the financial health of your enterprise that's real or enterprise that you're trying to create. So this session is really about how do you get started developing your income statement. It's about the most fundamental analysis that you would do to figure out how to make your business work profitably, right? So as you've seen through some of the other content, your profit and loss statement includes your revenues, also called your top line. That is all the money you're going to make through your business. You have your cost of goods sold, which are the actual expenses that are directly related to producing or buying your product. It includes, for example, the purchase of the raw materials, the wages you will have to pay your employees. It's all the different costs that are directly proportional to the volume of production or the volume of sales, right? And then you have all your overheads. That includes all your operating expenses. It includes your rent and utilities and equipment and advertising costs and sales commissions and your public relations expenses and your legal expenses and everything else that is necessary to run your business, but is not directly tied to the cost of goods sold, is not directly tied to the volume of the product that you are manufacturing, but it is amortized over all those different products. In other words, whether you sell a product or not, you need to make rent. You need to pay for utilities. So these are all the overheads that your business needs to account for to function. And if you subtract from the revenues, you subtract your cost of goods sold, that gives you the gross profit. If you subtract the operating expenses or the overheads from that, you get the net income or the net profit or a net loss. So what we will do today is look at a very, very, very simple income statement that was put together by my students that were working on a mushroom product. All right, there we are. So this venture is about manufacturing and selling straw mushrooms or oyster mushrooms in Sierra Leone. And the idea is very simple. 70% of farming is focused on rice farming, and you can do rice farming once a year. You have all the byproducts of rice farming, like the rice husk. And the question is, how can you use the rice husk to then grow mushrooms on the rice husks? We actually have a very successful venture in Cambodia in collaboration with a nonprofit called World Hope International. It's been incredibly successful. They produce about 5,000 kilos of mushrooms on a weekly basis. And now we are trying to figure out how to make this work in Sierra Leone, where there is no mushroom production on a commercial scale. So let's start with fundamentals. So what you're looking at here is the cost of goods sold. What does it mean? What does it cost to manufacture 1 unit of your product? So 1 unit of our product is 1 large bag of mushrooms. Well, how do you define a large bag? So let's go through some of these assumptions we have made. So all the cells that have an orange background are cells where you as the model developer or user can enter those numbers, okay? So 1 large bag is 100 kilos of mushrooms. A small bag is 1 kilo of mushrooms. Based on our experimentation, based on our work in Sierra Leone, we know that to get 100 kilos of mushrooms, 1 large bag of mushrooms, we need to have the following materials. We need grow bags. How many grow bags? 100 grow bags, and each of them cost 5 cents. The substrate is the material on which we grow the mushrooms, and we need 50 units of substrates. That is 50 kilos of substrate, and it costs 20 cents a kilo. So the total cost for the substrate is $10. The polyfill costs $1, and the spawn, which is like seed for mushrooms, costs us about $2 for the 100 kilos of mushrooms. So the total material cost to get 1 unit of our product, which is 1 large bag of mushrooms, 100 kilograms, is the $5 for the grow bags, 10 for the substrate, 1 for the polyfill, 2 for the spawn, and then there is labor. So this is labor that is directly tied to producing those 100 kilos. So we need 7 days of laborer time, and we pay those laborers $5 a day. So in essence, that adds up to $35 of laborer time. So what is the total cost of goods sold? For every single large bag of mushrooms sold, we will spend approximately $53. Okay, why approximately? Because we have not accounted for things like plastic bags and stickers that might go on the packaging and a bunch of other little things, which we can over time. But this gives us a pretty good idea as to what it's going to cost us to get 1 large bag of mushrooms. The cost of goods sold is $53. Now we know what the cost of goods sold is. Let's look at our sales projections. How many of these 100 kilo bags of mushrooms can we sell? So we looked at our ability to sell mushrooms based on interviews with supermarkets, with various partners like restaurants that are going to purchase our mushrooms. And here's what we concluded. We said that if we take a conservative approach, we can sell about half a bag of mushrooms in the second half of 2020. So we broke up our time into 4 durations of 6 months each. So year 1, which is second half of 2020, first half of 2021. Year 2 is second half of 2021, first half of 2022. So over a 2-year period, broken up into 4 6-month periods, our conservative estimate is that we can sell half a bag in year 1, followed by 1, 2, and 4. A realistic estimate would be 1, 2, 3, and 5. An optimistic estimate is 1, 3, 4, and 6 on a weekly basis. Okay, that's important. These are estimations. We said, okay, let's go with the realistic projection then, and that is 1, 2, 3, and 5. So on a weekly basis, if we can do 1, 2, 3, and 5 bags of mushrooms, on a monthly basis, we simply multiply by 4. So that is our sales on a monthly basis is 4, 8, 12, and 20. And on a 6-month basis, it is 24, 48, 72, and 120 bags of mushrooms. Okay. Notice that only the numbers on top are in orange. When we get to our sales on a monthly basis or a 6-month basis, they are not in orange. Why? Because we take the numbers from on top here, and then in the model, we multiply it by 4. Why do we do that? So that this model will auto-update itself as the projections change. And that's what you want your model to do. So what does that mean in terms of net revenues? So if we sell 24 bags in the second half of 2020, we will make $4,800. Why $4,800? Because each bag, each large bag is being sold for $200. A small bag is being sold for $2, and a large bag, which is 100 kilograms, sells for $200. So these are our assumptions on what our selling price is going to be, okay? So now these are our projected revenues based on these estimates. So we have the cost of goods sold, which is how much money it's going to cost us to make this product. We have our revenues, which is how much money we can make by selling our product, conservative, realistic, optimistic estimates. And let's put it all together in the income statement. So in the income statement, again, we have it 4 time periods, year 1, year 2, 4 6-month chunks, sales projections, 24, 48, 72, 120, which, as you will notice in the cell up here, come from the previous spreadsheet, come from the previous worksheet, all right? Our cost of goods sold, where do those come from? They come from the actual cost of goods sold per bag comes from the first worksheet where we said it's $53 for each 100 kilos of mushrooms. And what we do here is simply multiply that with the number of bags we are going to sell. So 24 multiplied by 53 is going to get us 1272, and onwards for the other 4 time periods. These are our revenues that we ported over from the previous worksheet. Okay, so what is our gross profit? Our gross profit is our revenues minus the cost of goods sold. So if you had no overheads, this would be your profit. But you always have overheads. You always have operating expenses. What do those look like? We have the supervisor's salary, which let's say is $300 a month. So let's just focus on this particular column B, right? Our supervisor's salary is $300 a month, which means that for 6 months, it's $1,800. And we said that for the supervisor to really do what he or she is supposed to do, we are going to give them a commission to incentivize them to sell more bags of mushrooms. And what is that commission? Right here in our assumptions, we said they get a commission of $5 for each 100 kilo bag that they sell. So if they sell 24, then they get 24 multiplied by 5, which is $120. Okay, so that's our overhead. That's amortized across everything that we sell. Our equipment, maintenance and repairs. If there is a problem with the mushroom house, it needs some repairs. It's a freak storm that leads to tears in the plastic covering. We need to get it fixed. We have some money set aside for maintenance and repairs. So we've set aside $200 for that. We need some money for transportation, for the supervisor to get around, to get the supplies needed to manufacture mushrooms, or to build new partnerships, to sell the mushrooms, or whatever else. So you have $100 for transportation. We have $100 set aside to buy some tea and sodas and beers for people as we are trying to build these relationships and sell our mushrooms. And finally, we have set aside $50 for communications. So the total overhead costs are now $2,370 for this 6-month period, which means that our net profit now has dropped from the gross profit of $35.28 to a net profit of $11.58. So how did we get to $11.58? That is our net revenues. You subtract the cost of goods sold, and then you subtract your overheads, and you get your net profit. And then we do the same for the second time period, the third, and the fourth. And you can see how over time, the first year we're making about $1,000, followed by $4,000, $5,000, and $13,000 as we've established operations and we are ready to scale up, right? So that's it. That's your first income statements. Of course, this is not realistic because there might be other overheads. We have not accounted for rent, and that's because we are partnering with an organization that gives us a space that we don't have to pay for. But at some point, you might have to pay for it. And so your overheads would include your rent, paying for electricity and water and whatever else. So this is a great way to just get started and look at how your business might work. And over time, as you further develop your business model, your operations model, you can add more line items and start bringing more and more reality to this income statement. So thank you for listening. And that's actually as simple as it gets, to just get started.